Right. Morning, everybody. Thank you for joining us for our AR webinar. This morning, I've got Hywel George, Director of Investments at Old Mutual, joining me. We're going to talk about AI. It just seems these days, all I hear is AI, AI, AI. Even the Pope's talking about AI. So this is a couple of the issues we're going to go through. How is AI changing the world? The impact on humans and jobs. What are the best investment opportunities in AI? Why billions are being poured into data centers? Winners and losers in the AI race, and the current investment hype versus previous internet hype. So, that's our team at Investonline. Investonline started 16 years ago. We were a team of 15, 6 in admin, and we do financial planning, wealth management, investment advice. We're based in Newlands, Cape Town, and with a client base throughout the country. Actually, the majority of them are really in Gauteng. In any case, Investonline really came about by providing a more efficient service, more cost-effective, by doing meetings, online meetings, where we can spend more time with our clients and end up being more efficient and more cost-effective. Right, let's get into it. So AI. So effectively, what really is AI? Artificial intelligence. So the name really comes from tasks that could replace human intelligence, such as sorting, searching, identifying patterns, and how we'll get more into this into more detail at a later stage. But I thought what I would do is, why don't we actually ask AI? I mean, how is AI changing the world? And this is what AI came up with. So first of all, AI is growing at an unbelievable pace. So relative to other new apps such as Facebook, Instagram, it took ChatGPT just 2 months to get up to 100 million users. And that was ChatGPT launched in November 2022. So it's absolutely exploded. Then really AI and what really works. So what they've looked at is where it's really had a material effect so far. So software developing, it's been 56% quicker. Professional services, it's made them 40% more efficient. Consultants, 25% more efficient. And then customer support, 14% more efficient. Then we've gone and looked at industries, and effectively where it really is moving the needle. Again, software, banking, healthcare and pharmaceuticals, education, retail, telecoms, and manufacturing. That's effectively where they've seen the most material changes taking place. So it appears as though most companies are using AI at the moment. It's at 88%. At Investonline, we've started to use AI as well. It's incredible how much more efficient it's actually making us. In terms of, is it being more profitable? There's 39% of companies are reporting that AI is having a profit impact. And then 5% are saying that it's driving profits by 5% at the moment. Right, so the 5 questions that will decide the next 5 years. So firstly, infrastructure-wise, who's building the engine that runs AI? The adoption, how fast will businesses really take on AI? Productivity, how much is it really going to improve productivity? Regulation, and when will government start regulating? Do we need this? And the competition. And how, this is where I'd like to bring you in. And perhaps just if you can answer some of these questions. Firstly, really in terms of building the engine. and running AI. I mean, is there going to be more competition here? It does seem like it's quite narrow at the moment.
Yes, morning, Aaron. Morning, Nick. Listen, there's a lot to cover here. So let's start with the actual infrastructure, as you say. One needs to think about this as the entirety of the world's output and activity being digitized to the maximum extent possible. And what that means is that there's an enormous amount of computing power required. And that computing power comes in the form of data centers. And data centers are large and heavy on water to an extent, and heavy on electricity. And so there is I guess, a race on at the moment, certainly a geopolitical race in terms of energy and turning that energy into data centers and into compute. And when that compute is in place, that allows ChatGPT or Claude, Anthropic, to answer the questions and do the tasks we all increasingly want. Because just turning that request into an output requires a lot of computing power. So you've got what we call the hyperscalers, building out the capacity. And those are the current cloud providers, basically. So Amazon with AWS, Microsoft with Azure, and Google. Those are really the prime ones. Those are the ones, and Meta, actually, to be fair. Those are the ones they'll put in close on $1 trillion into those data centers over the next 18 months, maybe 2 years. So an enormous CapEx project, and that's just in the States. And that, of course, will roll out globally as well. And so you've got an enormous infrastructure build, which will support this initial computing revolution.
Yeah. So then in terms of productivity, when do we really feel that we're going to start seeing it convert into company profits?
Yes, at the moment, what you're seeing is people aren't firing people because AI is replacing them really as yet, because people don't really quite know where this is going to land. And so at the moment, it's a productivity tool. So as you yourself said, it's amazing how much more productive we are using AI. But at the moment, you're still the same number of people. Nothing's happened to your cost base. You're just spending a bit more on tokens, which is computing power, which are the things you spend when you ask questions of GPT. So that productivity is kind of happening. What people aren't doing is really hiring many people. So the hiring numbers are very much down. Firing numbers are not really up much. So the unemployment rate is quite stable. And so you're not really seeing the kind of benefit in terms of cost cutting stroke productivity. So it's very early days for this productivity piece. That's going to come through increasingly over the next year, 2 years for sure, as you see that kind of staff component probably fall. And then your ability to be more productive for your clients, in effect, is going to benefit your business in terms of a better service for clients, and therefore more clients, and clients will do more with you. And your top line will improve. And increase even further. So that's when the profit comes through, but there's quite a lag effect. So I think some people are a little bit in denial in the sense to say there's an enormous amount of capex going in and nothing's really benefiting from it. That's going to come through very in very large scale over the next year or two.
Yeah, listen, it's interesting. Obviously, we can relate to the internet when the internet came out, and obviously the internet made us all so much more efficient. Obviously, emails. I remember I was actually working in San Francisco at the time when the internet started. We were still sending faxes. If you communicated via telephone or you sent a fax. But even if you rewind a little bit further back and you think about when Excel got launched by Microsoft, that was in 1985. And there was a feeling that a whole lot of jobs would be lost because of using Excel spreadsheets. But basically, it just really made people a lot more productive, and a lot more people started using Excel.
Yes, and I think you probably hit the nail on the head in the sense of what the internet and Excel and all these digital tools did was improve our ability to do the same task. So the Excel spreadsheet made you better and quicker at analyzing a client's financial position, for example. And the internet kind of supercharged that to an extent. What AI is doing the task for you. That's where we're getting to. That's the difference. So at the moment, it's an augmenting tool at the moment. We're very quickly getting to the point where a AI engine can look at someone's financial circumstance and make a recommendation. I'm not saying that replaces the human at this point, because I think human interaction is still very important, particularly when it comes to money and trust. But in terms of the task facilitation in the background, that's what's different. So the internet was a facilitation tool for existing tasks. AI does the task.
Right. And then regulation, obviously we're all fearful about what's happened with social media, and regulation seems to have been fairly slow there. Do you think regulation is going to come in and be a little bit more proactive with AI?
I'd like to think so. This comes into one of the investment maxims one should remember, which is that as professional investors, we're paid to predict what's likely to happen, not what we would like to happen. So it would be nice if this thing got regulated sensibly and safety, etc., and the thing didn't explode and take over everyone's job, and we get this kind of apocalypse scenario. I don't think regulation will do that. The genie's out of the bottle, and the AI engines are, particularly when they're open source, it is really out of the bottle. And so there's no way of putting this back in the toothpaste tube at this point. So regulation is behind the curve already. Where what will be interesting coming down the line is how governments react to the power of AI to change everyone's lives and potentially take jobs, because it is going to take jobs. I think that's clear. Maybe not everyone's job, and it depends what kind of job you're in. But that's going to be a massive societal change. And the way governments react to that will be critical. We can talk about that. That's quite a long conversation.
Yeah. Well, we're going to go into that shortly. I know how you did a very interesting piece on that, which we're going to play now. We won't forget about the competition. The competition, we'll talk about that a little bit later. But let's have a look at this piece that you did, Hywel, on will AI really take our jobs?
We're going to be talking about AI again today. There is so much happening just in the last 6 weeks. We've had a pivoting moment where Anthropic released their latest LLM, large language model, called Claude Opus 4.6, which may go down in history as the moment where AI became autonomous, agentic, as opposed to reactive. And that seems to be changing everything as we speak. And I think we need to start thinking about what that really means in the longer term, and the near term, in fact, but particularly in the longer term, in terms of what people are talking about in terms of how human labor may be displaced, augmented, what it means in the longer term in terms of a potentially post-human economy. I'm not saying we're going to get there, but we need to consider these things, or certainly a part version of them, and prepare ourselves. So I've put together some slides, and I'll share those now in terms of some thoughts on that. And a post-human economy question mark. If AI replaces human intelligence and robotics replace human labor, what happens to output, prices, work, and money itself? So let's see if we can work through this. And the framing is us going from narrow AI, which is what we've currently got now, really, task-specific tools, image recognition, etc., to general AI, where AI matches human cognitive breadth, to superior AI, or artificial superintelligence, ASI, where AI exceeds human intelligence in all domains, and ultimately robotics come alongside, and the humanoid robots are inhabited by artificial general intelligence or artificial superintelligence, AGI or ASI, and your humanoid robot knows clearly more than you would or I would. And as those robotics scale, which really we're talking 2027, 2028, again, that changes the human manual labor equation as well. So think about what that could mean for jobs generally, either displaced or augmented or stay the same. I've had a stab at this. Initial high impact and a high routine jobs, high cognitive, not low cognitive, high cognitive, low physical, things like data entry and processing, customer service agents, paralegals, radiologists, junior financial analysts in my particular world, content moderators, basic coding, we're seeing that already, travel agents, potentially. That's where AI will, or could potentially, replace the current jobs done by humans, which are very computer-based and very data-based. Middle column there, augmented, where AI accelerates, but human judgment remains important. Surgeons, complex medicine, senior lawyers and judges, architects, urban planners, teachers, certainly for the time being, therapists, scientists and researchers for the time being, senior engineers, CEOs, maybe CIOs as well, if I'm lucky, strategic leaders, and journalists and editors. And then those more manual tasks, which will likely stay more human, certainly for the time being, until robots really come along. Carers and social workers, plumbers, electricians, childcare, early education, emergency responders. That makes sense. Clergy, counsellors, artists and performers, politicians and diplomats, and community leaders. So that's the way I would categorize it. And let's just see how that will have an impact on us as humans, the potential human cost of transition. Well, firstly, an identity crisis. For many of us, work defines purpose, certainly for some of us, status and status in the community as a whole. Mass displacement doesn't just remove income, it removes identity. And that can be very difficult for people to cope with. Widening inequality. The ownership of AI systems could concentrate amongst the very few, whilst those I've just mentioned will face unemployment, certainly in the near term, and widening inequality as a result. Generational fracture. We're already seeing for the younger workers trying to enter the workplace, or potential workers, we're seeing those job openings for the more junior posts falling away quite rapidly now. That's very worrying for the early 20s, mid-20s into 30. And then mental health is not mentioned very much, but clearly the implication of this for people's well-being can be quite severe, and that's going to become a feature, I think. Historical parallels on the right there. The Industrial Revolution is, I guess, the most obvious one. 1760 to 1840, 1850, maybe a touch later. 80 to 100 years to displace a lot of agricultural labor. There was mass poverty, there were riots, there was social unrest. Very difficult time, but it took place over a century, not over a decade. Manufacturing offshoring, more recent example, particularly in the States and parts of Europe, where a lot of manufacturing moved to Asia. That did lead to a lot of the polarization we're seeing today and the inequality we're seeing today and the tensions that resulted from that. And then AI displacement, 2025, 2026 to 2030, 2035, 5 to 10 years, potentially less, and massive cognitive and physical disruption simultaneously. There's no precedent for this in terms of the speed and the impact it may have. How could the authorities react? How could governments react to this? At the moment, kind of in denial, in delay, kind of sort of trying to ignore it. AI treated as a productivity pool as opposed to a displacement threat. We're going to see a rush of regulation, I suspect, soon to try and protect the labour force from the impact of AI. That'll come in the next year or so. And then I suspect we'll get more social spending, potentially money printing as well, to offset the effect of unemployment coming through. Universal basic income or universal high income, UHI. That'll come through, I suspect, in terms of distributed social welfare. And then ultimately some form of proper structural reform in the early 2030s, a fundamental rethink of the social contract, new definitions of contribution, ownership and entitlement. And political instability drives urgency. There's a real question as to whether governments really can keep up with the pace of change, and whether the governance structure thereby can endure through this disruption. And while that's happening, we're transitioning, governments are trying to react. Ultimately, we'll get to the point where potentially, and again, this is one scenario, where human labor does get displaced on a mass basis, and you get AI replacing human intelligence and robotics replacing human labor. Those are the two components of any economy, human intellect and human labor. If they get displaced by AI and robotics, then your biological constraints are removed and your level of output explodes. And so your GDP can go up 5-fold, 10-fold, 100-fold. No biological bottlenecks. AI systems don't sleep, robotics don't sleep, they don't require breaks or holidays, they don't require any lighting in their factories. Even dark factories are being set up in China right now, inhabited entirely by robots who work around the clock. Compounding self-improvement, AI improves the tools that improve AI. Progress curves become exponential, potentially instantaneous. We're starting to see that in terms of the progress of these models coming out now, as we're living through today, a version of this digital singularity. And as that output explodes, then because there's so much supply, then the cost of that supply starts to collapse. And the marginal cost of information goods, certainly digital goods, falls close to zero. We're already seeing that in our digital world in terms of what we have to pay for and what we don't have to pay for. We don't have to pay for very much these days. Physical goods, as robotics come in 2027, 2028, physical goods start replicating very fast. The robots start to build themselves. And the price of physical goods starts to fall as well. So you've got a collapse in pricing. And then ultimately a post-scarcity economics model emerges. The study of economics is the allocation of scarce resources based on human inputs, remove human inputs, and remove any constraints. And your economic model has to change fundamentally in terms of what an economy is capable of. So what happens to pricing? As I said, a lot of prices fall to near zero for many things. Software and digital goods, information and content near zero. Most manufactured goods collapse in price. Food production collapses as robotics and AI take on the agriculture sector. Medical diagnostics falls precipitously, as is education. Education will probably go close to zero, I suspect. And education will be supplied on a mass basis at extremely high quality to everyone at a very, very low price, which will have its own implications in terms of bringing people into the workforce, if that still remains in place. And then rising prices, these would fall into the goods which remain scarce, and I'll cover that in a second, but briefly, prime land, or most forms of land, human experiences, energy will certainly go up a lot, because these AI systems are very energy hungry and data hungry. Critical minerals and rare earths, because they are the components which make robots, as well as the AI in the data centers. Human relationships would become valuable, more valuable, and high-end luxury goods potentially could become more valuable, or certainly priced higher. So a big bifurcation in pricing levels, but mostly prices go down a lot, aside from those things which remain scarce. So what resources will remain scarce? When labor is no longer the binding constraint, but scarcity doesn't necessarily disappear. It migrates. Scarcity migrates as opposed to disappearing. And these are four categories I would highlight. Number one, energy. We've talked about that. It's the primary input for AI and robotics. Electricity demand scales massively in this world until energy and data centers move to space, and that constraint is removed. And there's an enormous amount of energy available in space in terms of solar energy, and that constraint will ultimately be removed. But that's a little bit further down the line. But in the meantime, energy will remain scarce. Raw materials, again, until we start mining on the moon and on meteorites, raw materials for the air and robotics will remain scarce by definition. Land, again, if one owns land, as one's like to own a house, etc., then those will remain by definition scarce goods because there's only so many of them. So prime land and land generally becomes more valuable, I suspect. And human attention, human experience and social connection become premium goods outside of this digital world. And I think we're going to see a lot of move back, if you like, to that level of organic, non-digital interaction. So what happens to money in this world of age of abundance, this world of abundance? Does money become irrelevant? I suspect to a large extent it probably does. But I've sketched out some scenarios here anyway in terms of potential outcomes. So money could persist but transform into something quite different. So money evolves from a measure of labor, which is what it is today, to a measure of resource rights, those things which remain scarce: energy, land, attention tokens, data. So the function of money continues, but the substance changes. We could get a radical devaluation where money becomes changed into a voucher system, into an AI-managed credit allocation. That's a world where AI produces everything and distribution is managed centrally. So conventional money becomes redundant in that sense. And traditional money becomes meaningless in large parts of society. Well, the risk is that money concentrates in very, very few hands. And it'll be the hands who actually own the means of production, which is the provision of AI and the provision of robotics. That is a very, very small number of people. And that's extreme inequality and would lead to, I suspect, social disorder in that form of an unequal world. But broadly, I suspect money becomes potentially meaningless in this age of abundance. And what do we humans do? If machines do the work, what defines human purpose? Well, a leisure society. Humans are freed from the necessity of labor. This is quite hard to imagine because a big reason for work today is earning money so we can live and have a leisure life and have a family life. Aside from the purpose of work, one does it, many people do it for the money. And if that is removed, then there's no necessity to work, and humans are freed to do other potentially more interesting things. So the quality of life becomes divorced from economic contribution. So a purpose economy on the right there, meaning seeking replaces income seeking, art, relationships, philosophy, exploration, family, nature, religion. Potentially more meaningful, a more meaningful purpose to life than simply seeking money through work. UHI and redistribution, so the AI productivity gets taxed. So the AI output effectively gets taxed and redistributed, and we receive dividends from machine output. That could be no augmented function. And then a potentially separate ownership class, as I mentioned before. The gains get concentrated within the very small number of people who own that means of production, the AI and the robotics. A very uncomfortable outcome, I suspect, for most people. So a very different world to think about. And as I've said, I'm not saying this is the outcome, but it is a potential scenario or a version of it. And we need to start thinking along these lines to get ready for what's coming our way. So to conclude, there's a central tension here. Technology creates this abundance. The political outcome determines distribution of that abundance. But the post-human economy would become an engineering problem that becomes a governance crisis. Who owns the machines? Who determines who captures the gains from AI productivity? How is that output redistributed? Is it universal high income? Is it some other form of tokens or vouchers? Is it market forces? Who decides that? What defines human value? If it's not work, then what is it? What defines identity in the social contract? What defines social hierarchies, if there are any hierarchies anymore? And can institutions adapt fast enough, be it governments or nation states? I suspect that the pace of AI advancement will outrun the capacity of democratic systems to govern it. And that has profound implications in terms of how this new world gets governed. Will nation states survive? Will democracy survive? So fairly heavy philosophical questions. I've sketched out, if you like, an extreme version of it, but we do need to think, as I said, about some version of this or the pathway to it. It is coming our way very quickly now, and it'll be a healthy debate to have to talk more about this and navigate the journey towards it, because it's going to have profound effects on all of us.
Sure, Hal. Yeah, thanks for that. It sounds like the next industrial revolution is on its way. Quite scary, also quite exciting. I think one thing that comes to mind for me is in terms of the wealth gap. That's obviously a major issue at the moment globally. I mean, what do you think the effect will be on the wealth gap
in terms of inequality.
Yep.
Yeah. It'll either be an extremely bad outcome where inequality explodes. And as I mentioned, the means of production is owned by a very small number of people. Some might call them the tech bros today. I think we all know who they are. Doesn't mean they're bad people, but that level of concentration is de facto tends to be a very bad thing. Or it becomes inequality almost goes away in another extreme scenario, or somewhere in between. Inequality could go away, I'll say completely, if, for example, production is such via AI and robotics that this abundance economy means everyone is able to consume anything they want to at any point in time, pretty much for free. Extraordinarily difficult thing to imagine, but that would allocate resources in an abundant fashion, and therefore the means of rationing access to items moves from a money basis to an abundance for everyone basis, and therefore there is no such thing as inequality anymore. So it's going to be between one of those two extremes. I don't quite know where it might land. I'm more in the latter than the former in terms of a more equal world, I hope.
Well, I hope so. Thanks, Hal. So moving on, I thought, well, let's ask AI. Where are the opportunities to invest? And this is what they came up with. And this is actually Claude. So first on, own the engine, not the engineers. It's the whole thing about the gold rush. Own the picks and shovels as opposed to chasing after the gold. So in terms of the different layers, there's the initial frontier layer. So those are the so-called tokens. That's what we know as ChatGPT, the cloud, Claude, and there's a lot of price pressure there. So that's the one area. So we've got big listings coming up this year, OpenAI, Anthropic to be listed as well, other than SpaceX. Then there's the engine, and obviously the engine is the chips, Nvidia, all the power, the physical part that really goes into it. And that's an area where there's a lot of opportunity, and I think that's really taken a lot of the investment up at the moment. And then the last layer is really the user. And I really feel personally that that's really where the real profits are going to come through. And that's what we saw with the internet, banks, insurance, normal working life. As we all get more efficient, profitability of all these sectors goes up. And we've seen the profits throughout the market have increased significantly since the internet. And I think we're going to see more of that. Right, so they say computers, the new oil, coincidental oil. Obviously, oil is quite a talking point at the moment. But basically, nations really scrambling for where AI is taking place. So at the moment, I mean, the United States is just building all these. They've developed a lot of the technology, obviously building a lot of the data centers. But then there's other areas geographically, the Gulf states, Northern Asia, which is also doing a lot of the chip manufacturing itself, and of India as well, where there's a lot of service that's provided, and a lot of talent comes out of that big pool out of India. So the biggest gains, and as I said early on, may not really just be in tech. And at the moment, it's looking like it will probably be banking and insurance, professional services. Then we're going to have healthcare and pharmaceutical and retail and logistics. And certainly there's going to be some leaders and there's going to be the laggards. And for all business people out there, I think really getting on the front foot with using AI, the sooner you do that, the better. As I said, we've started to do that in our business. It's just from an efficiency, what we can offer so much quicker to clients is just significant. And it will all probably lead to probably lower costs and probably lower fees into the future. Right, so this is how AI says you should invest. Right, in terms of a portfolio, 50% into the engine, the picks and shovels, i.e. the chips, the infrastructure, the hardware, 30% into users, i.e. the banks, insurance, customer service, and then the last 20% is really into the frontier, which is effectively the AI software, the ChatGPT, the Claudes, etc. So then I went on and I thought, well, let's just have a look and see if history can show us something about the hype. And so how markets work is that markets ramp up on the rumor and effectively they sell on the fact. So these AI companies, and the one big one obviously is like Nvidia, has just gone through the roof. And this is all about them making this new fantastic AI chip, and it's going to be around and it's going to change the way that we work. But how much does one pay for it? And we're just not really sure how long this is going to continue in terms of the profitability. So we thought, well, why don't we look at the last big invention? And that was really the internet. And the internet, the big Nvidia stock in those days was Cisco. Cisco provided a lot of the internet hardware, routers, etc. And you can see the graph on the left-hand side is Nvidia. The share price has just really just gone through the roof. And then on the right-hand side, this is going back 1995 through 2000, which is Cisco. And you can see how the Cisco share price had no end. You just had to have Cisco because of this new technology called the internet. However, it ran out of steam and we had the internet bubble. Cisco collapsed and it took about another 20 years to recover your investment. So just be cautious on buying the hype too much. So this is the same. Now this is just looking at the earnings and the revenues of these two businesses. So you can see Nvidia on the one side, those are their revenues, and that's just justified how the share price has gone up. The little red dotted line there, that's when ChatGPT came out, and from there, the revenues have just shot through the roof. There's been more and more demand for these fantastic AI chips. But if you look at Cisco's revenues also shot up through the roof. And then there was this massive collapse thereafter and took quite some time for revenues then to recover. Profitability. So I think this is the major risk. And Hywel, I'm going to bring you in on this just now. But the operating margins of Nvidia are over 50% at the moment. And that is absolutely, I don't want to say they're abnormal, but they are way higher than other operating margins, even across IT and certainly just across industries. I mean, the average operating margin on the S&P 500, I think, is 12%. So the key risk is, can they maintain this operating profit margin? I mean, I would say, in my opinion, there's no ways. And that's going to have to come down as more competition comes into play. And unfortunately, that will probably be the start of the decline of the share price. Who knows when that's going to be? I mean, what is your view on them maintaining these high operating profit margins?
Yeah, I tend to agree with you, Nick. I mean, it is probably an abnormal time for Nvidia in a kind of a good way for it. The normal profit margin for what is a very cyclical business generally, which is chip supply, tends to be kind of 5-8% at best, and very cyclical up and down because that's the way the tech industry has traditionally gone. We're now in a what you'd have to say a super cycle. And so this may last, longer than we expect. It's certainly possible. Margins are certainly elevated to a significant degree. I mean, its gross margin is, I think, north of 75%. And it clears those 55% operating margins. I'm sure many on the call would love to have operating margins of 55%. But that tells you it's probably going to come down. And that's where the price earnings multiple can be misleading. It doesn't look too bad, but that's because the profitability is so high right now. These kind of quote unquote bubbles can last much longer than you think. So in terms of when it might come down, very hard to say, but definitely, yes, a word of warning. I think you're right.
Yeah, so as Hal said, in terms of the price earnings ratios, Nvidia does not look, just on the face of it, super expensive. There you can see the PE chart, how it's really been up and down, and the profits have come through to support those high valuations. So now at a PE of around about 22 does not look expensive. However, I mean, is that level of profitability sustainable? And I mean, I would say there's just no ways. It will come down at some stage, and that really puts you at risk. I mean, owning certainly a company like that. You can see with Cisco on the right-hand side, the Cisco PE shot right up, absolutely collapsed, and then came back down to around about a 20 PE. Right, well, that's it. Hal, thank you very much. Just one or two things on Investonline. Please, we've got a investment proven track record. We have a team approach to everything we do. From an advice perspective, our fees are completely transparent. That's really important. And certainly from an ongoing service perspective, we do ongoing reviews all the time with our clients. Thank you very much, everybody, for joining us. Hal, thank you so much. That was really, really interesting. So everybody, until next time, goodbye.
Thank you. Goodbye.
Cheers.